Okay, hi everybody. We are the Palestri Group, Jennifer Hornick and my partner Bob Palestri. I am right now sitting in Florida. He is right now sitting in New Jersey. We have the good fortune of being able to operate our real estate business in two of the top markets in the Northeast, which is Long Beach Island, New Jersey, and Northeast Florida. So, as part of our ongoing conversations that we're having, we thought it would be very interesting to have on two of our partners that we work with in lending in each of these markets to get their perspectives and share those with you guys. So, today we are joined by Kayla, who is a top loan originator with Atlantic Trust Mortgage, and she serves our Florida market. And we
Hello.
have Frank Astemborski, who is VP of Residential Lending with New American Funding, and that is based in our New Jersey market. So thank you both so much for being with us. I think that you'll be able to give some helpful tips to people that are out there in the market right now looking to make purchases. So I'll get right into my questions. The first question I have is, are people buying in your prospective markets? Are your applications increasing, decreasing, staying the same? And a part two of that question is a trend that I'm seeing in Florida is listings offering assumable mortgages. And how do you feel about that? Is that a good option for buyers? Is that safe for a seller to do? So I'm interested in hearing your perspective on that. So I don't know if you want to start, Kayla, with that question, and then we can turn it over to Frank for New Jersey.
Sure. How is everybody? Thank you so much for having me on. So, yeah, I mean, our market is all over the place right now. I feel like the first quarter was kind of slower compared to the last projections that we've had, but really and truly, April and May have kind of picked up with application count. We're kind of back to those normal numbers from a few years ago. Everyone's definitely getting pre-approved, maybe getting ready for the summer because that's traditionally our busy time. Fingers crossed. As far as assumable mortgages, it's a great option. I know a lot of people do offer that program. It's a great option. So for the seller, the cons kind of there are if you're a veteran, your entitlement isn't freed up. So there's a couple steps that you kind of have to make sure that you go through once the loan closes. And so
So
your
they
agent.
wouldn't be able to get another, if they were moving somewhere else and wanted to use that, they wouldn't be able to do that.
So they might have enough bonus entitlement to purchase a second home,
Okay.
but that's something that they would want. If that's something they're considering doing an assumable mortgage with their agent, they would want to get all the information up front from their servicer, because that's something that if you called me and said, hey, this home's offering an assumable mortgage, I wouldn't be able to do it. The servicer that they currently are with has to do that loan.
Okay.
And that servicer might have different overlays to their loan product. So that's something as a seller that upfront you would want to get all the information. You would want to see about your entitlement. You want to get the details on after you close, what that will look like for you. So you do, kind of transfer over that entitlement to the new buyer. That's really and truly, there's pros and cons to that product, but the great option is that you can assume an awesome rate.
Yeah.
What I traditionally like to talk about is just kind of buying power. So basically, if their rate is a 2.75, a 3%, I like to compare today's rate, where if the seller is on top of that, going to give a seller concession and kind of show what that looks like, because sometimes assumable mortgage might not be the best option for that buyer. So really and truly, it's based on the buyer you're working with.
Great. Okay, Frank.
Well said, Kayla. I agree with everything you said. Yes,
Thank you.
coming into this year, I was quite concerned. It was a little slow coming out of 23. January, February were not so fun. But yes, I've been picking up some business. I saw a little turn in March into April. I had a nice closing month for April. I'm having a much more vigorous closing month for May. June looks great too. So I agree with Kayla. I think maybe it's the spring market. I think people are getting more adept to where interest rates are, and I think they're just accepting it. I've been not saying pushing, but I've been mentioning to many people. I think rates turn around. So I said, why don't you be a buyer now? You made it tighten your belt a little bit, get the home you want, and we'll come back and refi in a year or two and save them a few $100s a month. And I think that's really helped a lot. I do a lot of first-time home buyers. I think Kayla's more of a specialist in VA. I do a few VAs a year, but yeah, I think I'm feeling a lot better now than I was just a few months ago. I I like what Kayla had to say about the assumable mortgages. I know what they are. I don't really delve into them. They're more VA-based government type loans. So she described it perfectly. So I don't even want to go down that road any further because
Yeah,
she hit
and
it on the head.
it's not
So
something that I'm seeing in the New Jersey market. But I am seeing it being offered on listings in Florida, much more common. So it's just interesting. That's a difference in the markets.
yes,
So my,
if I can just jump in here real quick, Jen, I
yeah.
just had twice yesterday, realtor.com is pushing this and they're popping it up. So I think it's something we need to be addressing because I
Okay,
think
good.
they're
Yeah. And I feel like Kayla mentioned, it may sound like it's such a perfect option, but you really need to make sure that you know what you're doing and educate yourself. And so that's part of, maybe we'll actually go deeper into this on another conversation another time. But that brings me into my next question, which is the elephant in the room, which is interest rates. So I personally feel like it's a perspective change for buyers, and because this is our new norm. I don't think we're going back to 2 and 3%, but I'm not the professional. You guys are in this, but I feel like this is our new norm, and people just need to stop that wait, perspective. But I'd love to hear from you guys on interest rates, and what are you telling buyers? And do you have any workarounds to this?
good, Kayla.
Do you want to? Okay. Exactly what you and Frank said. It's kind of the new norm. It's just, I'm not even making it a triggering conversation with a lot of my buyers. Simply what we kind of chat over here about is payment, where you want that, where it's comfortable for you and your family. Then you can find a home based on that option. Because right out the gate, when people call you, they're like, what's the interest rate? That's the big elephant, like you said. Everyone just wants to rate. And it's like, well, that's not really the priority of this conversation. Like, the conversation that needs to be had is, what can you afford right now with where market conditions are? And if you're comfortable with that payment, then we can always talk about refinancing. So we're definitely, as loan officers, always strategizing with our buyers for their specific scenario, because every buyer is just so different. And then really and truly, when we do go over everything and get them comfortable with their scenario, the rate's not really a big deal. And then they kind of see where the rate is currently, and where, if they buy it down permanently or do a 2-1 buy down, which is an awesome product, they're not so scared. So I think it's just having the upfront conversation versus, oh my gosh, where are the rates? Because it is so daunting right now. But that's really and truly what we focus on to make it less scary. And then the second thing I'll say is the waiting period. I think it's so crazy that everyone's like, let me wait. Because what's going to happen is, when rates do drop, we all know what happens with the pricing. So, a home that you are approved for this month, in 3 months, when rates do drop, if they do, you're out, because you're buying $50,000 over where that house was initially. So those are kind of things that I'm saying consistently to everyone. And then I do take the pressure of, hey, once we can refinance, here's where we are, here's what we're offering if you do close with us.
Well said again, Kayla. I will endorse everything you said. I have changed my ways. I have really tried to steer away from the interest rate subject. Of course, we have to address it, but yeah, many people, hey, where are the rates at today? And I'll answer that question, but I'm also going to steer away from it and try to focus on what's your buying power, what's your buying ability right now. And I keep saying I agree with Kayla. It's a different dynamic now, and I got to be focused on, are they pre-approved? I really focus now. Probably one of my first 1, 2, 3 questions, especially with first time buyers. What's your comfort level on a payment? And I try to reverse engineer it a little bit to come back to, yeah, I know you're looking at that 450 house, but in reality, you shouldn't be looking at that house, because you're no matter what the rates are, it's not going to happen. So let's talk about something that's more realistic, and to give them some comfort and give them some reality checks in a nice professional way, that we got to steer them accordingly. And that way I hand them off to the realtor, if it's Jen or Bob or whoever, that way they know they're guided properly, instead of just cutting them loose and say, oh yeah, you can afford a $500,000 house, but it's going to be $3,500 a month. And no, that's not for them. So,
And then they can't do anything but sit in their house. They don't have any furniture, and they can't go anywhere or do anything or go out to dinner.
yes,
Right.
exactly. Yes.
Can I say
Let
one?
me jump in. Oh, I'm sorry.
Sorry, go ahead. I didn't mean to cut you off.
This is Bobby P. from LBI, the partnership. Two quick questions. Are both of you, you're both private mortgage firms. Is anyone looking at, because our market, it's a 500,000 to 10 million market. And I'm looking to buy even down in Northeast Florida. And that's a $500,000 to $2 million market. Are you looking at lower down payment programs for higher priced homes? That
Yes.
would be my first
Yes.
question.
Yes, 100%. And Frank, if you want to take this one first, you can.
I'm seeing quite a few people are just not able to step up to the plate with your old time 20-25% down or more down payments. I'm not seeing it as much now. So we have to be more adept to the 5%, 10% down, talking about maybe a PMI buyout or a hybrid of that, and discussing that to make them eligible to be home buyers now. I think
So you're looking at, or you have these programs today?
I'm sorry, Bob.
If I wanted to buy a house, can I get a mortgage with 5% down on LBI on a $3 million house?
Okay, so the answer there is no, Bob. I wish that'd be wonderful. I'd have a hell of a commission, but no, that's not available. We can still do 10% down second homes. I think it's around $1 million. So roughly speaking, a 1-1-1-2 purchase, 10% down, 1-1-5 with 10% down. Then once you get into that 1-2, 1-3 and up, especially as a second home, you're definitely at 20% down.
Okay.
And then as we get approach 2 million, 3 million, 4 million, now you can be at 25, 30% down second homes. If I may, real quick, primary homes, I don't see much down on LBI. So it's if you found something for 900 grand and 5% down, sure. As a primary residence, yes, I could do something like that.
Yeah.
Kayla?
And we're the same. So, and what I was going to add into that other piece is just kind of like Frank and I are throwing in when we're talking about every piece is education. So right now with where the market is, the LOs, the loan officers that are really struggling are the ones that never educate through the process. Because that everyone's so rate cautious right now. So I think if you're not taking the time, whatever the program is, jumbo and all of those things you were just chatting about, if you're not educating the buyer with all the options that they have and going through all the scenarios and educating them on what those mean, then yeah, it is a really scary market right now. But otherwise, it's really not.
Mm-hmm. Yeah, and if I may, real quick, is what people potentially face with rentals now and the cost of rentals. I think sometimes I enlighten them with, hey, you can actually be a homeowner, and the principal, interest, taxes, and insurance are equating to maybe a rental payment, and that's got me some business right now where people are like, holy cow, really? Because they're facing leaving mom and dad's house for the first time, and they're getting a reality check on rent, and so that's been a bit helpful too.
Do you have another question, Bob?
No, that'll be it for the moment.
So before we close, I just wanted to know if each of you had your best tip for someone who is looking to buy right now, whether it's primary home, whether it's vacation home, maybe what do you think is the best tip that you could give them?
So for me, I have three. So the first one is get pre-approved first. And through that process, the misconception is everyone has to put 20% down. That's not true. Have a conversation, get some education from your loan officer to strategize for your personal buying power. And then the third one is to lean on your support. So I think that's really key in this process. I think once you build a team with your real estate agent and your loan officer and they work together very well, you should lean on them throughout the entire process.
Great.
I once again agree with Kayla. I'm going to add a little bit to the pre-approval. I think it's helpful now in today's market from a reputable loan officer, preferably somebody because I'm not going to mention who, but if you can go out and just get a generic pre-approval letter, especially for a buyer that might be a little bit compromised, lower credit scores, whatever it may be, you want to make sure the person they're working with knows what they're talking about. If it's a new entry loan officer just looking for business, they're desperate, be careful. That's all I'm going to say about that.
And a listing agent that is working for their client is going to want a pre-approval from a reputable lender, not one of these, so Make
has
sure
changed a
also
lot
if
recently,
you
yes.
happen to be a seller listening to this, that your agent should be checking that that is a legit pre-approval. You
Absolutely.
don't want to go down the road with someone that's not actually qualified. So go
Correct.
ahead. Sorry, I didn't mean to interrupt
Oh
you.
yeah, no. And I just want to add, I kind of I agree with Kayla again. I give people a perspective of where they should be on a payment. Seems for me in my market right now in primary purchase, people want to hover in that 1,800, $2,000, maybe 2,200 a month. That's what I see commonly, especially with younger people. But I'm also prepping them saying, hey, you may have to bump that 5 or 10% higher. As long as they qualify, to say realistically, to find that home, you may have to just tighten that belt a little bit more in this market to just become a home buyer. And again, I keep coming back to, I truly believe we're going to be having a refi market in 1 to 2 years. I see it happening. No, I don't see 2 3/4 and 3% coming back, and I'm staying away from the numbers, but I think we're going to see some relief down the road.
Well, that's
When I don't know.
That's nice to hear.
Yeah.
Positive outlook.
Yeah, it could be again easily 25, could be 26. But I'm in it for a few more years, so it's all good. I swear I'm looking for a refi boom realistically in a couple years. So
Yes.
Great. Well, unless anyone has anything else they want to add, I appreciate you guys being here so much. If anyone has any follow-up questions, reach out to Bob or I. We will get you in touch with Frank or Kayla, depending on which market you had questions about. And we will thank you for watching, and we'll be back with something else next week.
Thank you.
Thank you